AI and space stocks have already moved. If you only noticed those trades after the charts went vertical, you were not alone. But the next capital rotation is still early, and this time it may be happening in the physical world: humanoid robotics, machines with arms, hands, sensors, and bodies. Today, we're going to show you 3 stocks that could lead the next wave. One is deploying robots, another is building the physical AI infrastructure, and one gives investors access to the private market. The dream is a general-purpose robot, one that could work in factories, hospitals, and maybe replace entire categories of physical labor. The market already has one image in its head: Tesla Optimus. But the obvious story isn't always the best trade. Tesla gets the headlines, viral robot videos, but if humanoid robotics becomes the next big theme, the capital flow will spread far beyond Tesla. So, in this video, we're asking a more useful question: who captures the upside if humanoid robotics becomes the next major trade? Because if AI gave technology a brain, humanoid robotics may be where technology finally gets a body. But before we get to the stock names, one quick thing: robots are nothing new. Industrial robots have been inside factories for decades, but humanoid robots are different. Goldman Sachs estimates the humanoid robot market could reach $38 billion by 2035. The real promise is flexibility. A humanoid robot can enter a human-designed environment, use the same tools, open the same doors, work at the same stations that already exist. And that matters, because most of the physical world was built for humans. Warehouses, airports, homes. It's about fitting into the infrastructure that's already there. And that's exactly why this theme has become investable. Morgan Stanley sees an even bigger opportunity. The firm estimates the humanoid robotics market could reach $5 trillion by 2050. Those numbers may prove too optimistic, but they tell us something important. Major banks now see humanoid robotics as a real market, not just a tech demo. And investors are already looking for the same thing they looked for in AI and space: a way to invest in the theme through the public markets. And that's where our 3 picks come in. But before we get there, we need to separate the dream from the trade. Tesla Optimus is the poster child of the humanoid robotics trade, and for good reason. Tesla already has the factories, the batteries, and the global brand. If any company can make investors believe in robotics at scale, it's Tesla. But this video isn't about buying Tesla. Tesla is just the signal that tells us humanoid robotics is becoming a serious capital market story. Tesla is also a giant, complicated company. There are multiple stories: electric vehicles, software, energy storage, manufacturing, and now humanoid robotics. That makes Optimus powerful, but not a pure robotics investment. There is also execution risk. Recent reports say Optimus production is expected to begin at Tesla's Fremont factory in late 2026. But production is likely to be slow and difficult to predict, because each robot contains more than 10,000 unique components. That is the key issue. A humanoid robot is not just a car with legs. It needs balance, vision, dexterity, and an entirely new production system. So Tesla tells the story, but we're interested in the surrounding traits: Hyundai, Hexagon, RoboStrategy. That's where this story begins. Here's the framework. Hyundai is the deployment play. Through Boston Dynamics, it gives investors exposure to Atlas, one of the most advanced humanoid robots in the world. Hexagon is the physical AI infrastructure play. It gives investors exposure to sensors, industrial software, and Aeon, a humanoid robot already being tested by BMW. RoboStrategy is the access play. It gives investors access to private robotics companies that most investors simply can't buy. 3 names, 3 different exposures. Tesla is the dream, but it isn't the company we'd choose to invest in. The first name is Hyundai, a South Korean automaker headquartered in Seoul and listed on the local stock exchange. Hyundai gives investors public market exposure to Boston Dynamics, one of the most respected robotics companies in the world. It built Spot, it built Atlas, and it partnered with Google to bring Gemini to Atlas. Now it is trying to turn Atlas into a real industrial product. Hyundai's advantage is simple. It is not just an investor, it is also the customer. It has the factories, the production lines, and the real-world platform where robots can be tested, trained, deployed, and improved. Recent reports say Hyundai plans to mass produce 30,000 humanoid robots a year by 2028, starting with deployment at its Georgia Meta plant. That is the number that matters. 30,000 robots a year, not a lab demo, not a one-off prototype, a real manufacturing plan. That is exactly where humanoid robots could fit. Not in your living room, in the factory. And there is one more catalyst: recent insider buying. Reuters reports that Hyundai plans to buy SoftBank's remaining stake in Boston Dynamics, a deal worth $325 million. If completed, Boston Dynamics would become a wholly owned Hyundai subsidiary, making the robotics story even cleaner for investors. The thesis is simple. Hyundai is the near-term industrial deployment play. The upside is clear. Humanoid robots could become part of Hyundai's factory operating system. The risk is just as clear. Hyundai is still an automotive company. Robotics is strategic, but it is not yet the financial core of the business. Hyundai gives us the robot, but a robot is only useful if it understands the physical world. It needs maps, sensors, workflow data. That brings us to the second name, which is Hexagon, a Swedish company listed on Nasdaq Stockholm. This is not the obvious humanoid robotics pick, and that is why it is interesting. Most investors do not think of Hexagon as a robot company. They think of it as an industrial technology company. Measurement, sensors, industrial software. But humanoid robots need exactly that. They need to understand where they are. They need to scan parts. They need to coordinate with machines, workers, and factory workflows. That is physical AI connected to the real world. The key robotics angle is Aeon, a humanoid robot developed by Hexagon Robotics. BMW has started testing it at its Leipzig plant in Germany, with the pilot focused on high-voltage battery assembly and component manufacturing. That is a strong proof point. BMW is not testing humanoids in a showroom. It is testing them in production. Reports describe Aeon as roughly 1.65 meters tall, weighing around 60 kilograms, moving at up to 2.5 meters per second, with about a 3-hour active battery life. It can also swap its own battery. That matters, because battery swapping is a direct answer to one of the biggest industrial robot questions. How do you keep the machine working through a shift? BMW previously tested Figure AI robots at its Spartanburg plant in the United States. Remember that name, because it also connects to our third stock pick. Those robots reportedly helped produce more than 30,000 BMW X3 vehicles. That is important context. BMW is not just experimenting randomly, it is building a robotics learning curve across plants. So the Hexagon thesis is simple. It is the physical AI infrastructure play. The measurement layer, the industrial data layer, the factory intelligence layer. Hexagon is not a pure humanoid robot company, but that may be the point. It gives investors a real industrial base, with robotics as the upside option. So far we have one company deploying robots into factories, and one company building the physical AI layer. But there is a third way to play the theme, by owning access to the private market. That brings us to RoboStrategy, listed on Nasdaq but headquartered in San Juan, Puerto Rico. This one is different, because it is a market access vehicle. It trades under the ticker BOT and gives investors exposure to private robotics and embodied AI companies. This matters because many of the most exciting humanoid companies are not public. Figure AI with its humanoid robot is private. Apptronic with its Apollo robot is private. Dyna Robotics with its manipulation systems is private. Dexmate with its Vega robot is also private. So, normal investors cannot easily buy the purest part of the humanoid robotics boom. RoboStrategy tries to solve that access problem, as it has invested in all of them. These four constitute over 80% of its portfolio. The company also has smaller stakes in 9 more entities, as per its latest registration statement. The private market numbers show why this matters. In September 2025, Figure AI raised over $1 billion in committed capital, at a $39 billion post-money valuation. That was a massive step up from the previous $2.6 billion valuation. Last year, Apptronic raised hundreds of millions of dollars for its Apollo humanoid robot, with backing from names like Google and Mercedes-Benz. This is what a capital raising cycle looks like. Private companies get funded first. Public investors come later, and the access vehicles can become the pressure valve. That is the RoboStrategy thesis. If humanoid robotics becomes the next private market boom, public investors may search for any liquid way to get exposure. But this is also the highest risk pick. A wrapper-style vehicle can trade above or below its net asset value. It can own illiquid private stakes. it has fees, and uses financing structures that can dilute shareholders. So, let's reduce it. Why these three? Because each one maps to a different part of the humanoid robotics trade. Hyundai gives us deployment, Boston Dynamics, a 30,000 robot annual target, and factory use cases. Hexagon gives us infrastructure, Aeon, cooperation with BMW, and physical AI. RoboStrategy gives us access, private robotics, and embodied AI companies that most investors cannot buy directly. That is the clean framework. Tesla is the dream, but these three together give investors three different ways to express the humanoid robotics theme, without just saying buy Tesla because robots are cool. Now the risks, and there are many. The first risk is hype. Humanoid robots look like the future. That makes them powerful on YouTube, but it also makes them dangerous in markets. The second risk is unit economics. A robot has to be cheaper than the human or machine it replaces. Some reports still put humanoid robot costs in the six-figure range. That has to fall dramatically for mass adoption. The third risk is technical complexity. Humanoids need energy efficiency, safety, and reliability. A robot that works in a demo may not work 10 hours a day in a factory. The fourth risk is adoption speed. Pilots are not the same as deployment. Deployment is not the same as profit, and profit is not the same as stock market return. The fifth risk is stock specific. Hyundai is still mainly an auto stock. Hexagon is still mainly an industrial technology stock. RoboStrategy depends heavily on structure, fees, liquidity, and private market valuations. So the theme is strong, but it is early, and early themes punish investors who confuse a good story with a good entry point. So here is the thesis in one line. Humanoid robotics could be the next big trade, after AI and space. Tesla Optimus is the dream. That makes the market pay attention, but the real public market trades may be elsewhere. Hyundai gives us industrial deployment through Boston Dynamics and Atlas. Hexagon gives us the physical AI infrastructure layer through Aeon, sensors and factory intelligence. RoboStrategy gives us high beta access to private robotics and embodied AI exposure. None of this is perfect, but together they map the opportunity better than a single hype stock. Because if humanoids really move to deployment, the winners will not only be the companies with the best robot video. This is capital rotation. We look for the capital flows behind the headlines.